The 85th percentile. According to some big bank reports at the moment, we're seeing a huge discrepancy between pullbacks in the market. And this will come as no surprise to most people that have been trading over the last couple of months. It's been a vertical shift driven by options, euphoria, and of course a lot of calls. Now we see the articles coming out about banks. JP Morgan just cut a whole bunch of major banks. And at the same time, we get the counter argument from the Fed. They say the stress test sees large banks able to handle recessions and a slide in the commercial real estate price. So who will be correct? Well, I love the narratives both ways, but more importantly, we're interested in price here on the channel together. So let's take a look from an investment and a trade perspective of what we're seeing here in the markets as we reject these highs and take potentially some stop losses over the last 24 hours. There's a lot going on in stocks, commodities, and cryptos, so join us now. Well, welcome back everyone to the Daily Show where we talk about markets around the world. And of course, we've got a lot to discuss in today's video. We're looking at stocks, commodities, and cryptos, macro, leading indicators, and hottest charts. Subscribe and smash that like button if you like those types of things. Let's talk about rotation. So we saw Tesla and Netflix, the standouts for the session, along with a few other very sneaky plays. One of the favorites for the last 24 hours was, of course, Snowflake. That did quite well in the session. But let's go and have a look at forward PEs, because a lot of people are wondering, well, do I jump into the markets at these levels with these small pullbacks? We just looked at the start and we saw that the percentile was pretty rare. In fact, we're starting to get up there with these runs that tend to pull back at some point soon. If we have a mean or median that's sitting around 45 and we're sitting at a lot more days than that, we're in the 85th percentile, maybe it's time to say mean reversion is potentially just around the corner, and we can take it easy into the next couple of week months. While we do see a summer rally that usually comes through July, at the end of July into August and September, often weakness does prevail. So it might be time to be cautious. But let's take a look at this forward PE average over time. This just shows us whether markets are historically cheap for these stocks or not. And if you like this stuff, let me know over on Twitter. I'll keep posting it for you guys along with some forward pegs as well. So let's move over to Google. It seems like it's probably one of the ones that's maybe a little bit cheaper. It's been downgraded recently. That's a huge part of it. AAPL and Microsoft are often considered two of the best stocks. That's why they're the biggest as well. They're on ripper runs, but they're starting to get a little bit too expensive. Have a look at where Apple is in comparison to even the 2020 and 21 forward PE highs. Starting to get a little bit of a standard deviation away. Maybe a concern. Let's move over to squeeze sentiment. Now, this is something that comes from JP Morgan. As we know, I've been mentioning this quite a few times. Just remember, we've been in a squeeze. We've seen a bit of a turn. We're rallying at this point, which we expect, by the way. We took a new low, which technically gets swing traders in. And now we're picking up to levels where swing traders, if they're going to enter short, would be around these zones from a technical perspective. Will it work every time? Well, you're trying to counter the trend, so it's very, very difficult. But we'll talk about those levels later on. Equity risk premium, I'll keep talking about it, but we'll get back onto that in the Q3 earnings. And of course, we also know that interest rates are a huge thing. A lot of you did want a deeper discussion into interest rates. We'll bring that to you very soon. Most people are now expecting a 25 basis point rate hike coming into, of course, July's Fed meeting, followed by maybe even another rate hike later on in the year. So what do the data or the stats say? Well, let's talk about July and where we are right now. If you took this week, the next week, and the week after that, with the consideration of a down June OPEX week post following, we usually have a very bullish statistic. We brought that up this week, and I think if we do continue to sell off, especially if it's fairly quick and happens in maybe the next 4, 5, 6 days, then we're probably going to be seeing a decent rally. And of course, the stats don't lie. 16-1 on the bull favor. That's a pretty big stat there. We know that Julys in pre-election years do tend to be positive overall. You can see here some of the readings. These are based on trading days. But, you know, it's not really an exceptionally good month. The best months technically for a seasonal pattern are beyond us, especially for the NASDAQ. You can see here pre-election years since 1950, the NASDAQ in these considerations has only been up 7, down 6. not a great stat there overall, considering how bullish this market has been recently. Something to take into consideration. We're also going to get another sentiment survey report over the next 24 hours, so make sure to come back for next video where we'll find out whether everybody is still super bullish on markets. I would guess this is still going to be in the high 30s to 40s in terms of bullish side. The reason why is simply because we keep seeing buy the dip reflexes from retail traders, which we see through the calls, which we'll look at in a second. I do expect the bear to be slightly higher though, because of course last week was down, meaning that more people are going to be looking at the bear side in general. If you haven't entered our FX Evolution competition for June, make sure to do so. There's only 4 days left. It's completely free to enter. Just put in your name, email address, and you can win one of a few of these prizes here. It's always great to give back to the community. And for anyone that wins the first prize, I'll see you very soon in the mentoring, which will be exciting. I'm sure you're going to learn quite a lot. And hopefully you'll find out some things that you may not have known about the markets. Let's move over to Fear and Greed Index, extreme greed. Well, not a surprise there. We've been seeing that quite a few days now in a row. And we'll move over now into the options, because this is where usually we find any secret kind of source that's happening in the markets. Have we got any unusual relative volume? Well, one of the ones we bought up, in fact, two of the ones we bought up in the Monday stream, which we do every week, which is, of course, the Monday live stream, was Zoom, which historically I've hated that stock. So remember, it's weird that I bring that up. And then, of course, Snowflake. Now, we got lucky on Snowflake because the CEO decided to mention AI 5,000 times. And that helped us a lot because, of course, that meant that everyone got excited about it. 2.58 times relative 90-day volume. A lot of calls coming in on that. You can see here 121,900 call volume to the put volume. And we basically saw it move up. I think it was up with about 7-8% at one point during the day. Nice work if you were on that one. Zoom did okay. It was only up 0.9, but still holding its own. And, of course, the other one that we've been recently talking about has been PayPal, which had some unusual volume on it, but overall pretty bad in comparison. In fact, it wasn't really that exciting. Overall 0.8%. It's nothing much. Now, as we scroll down, another day for the calls. 57% calls, 43% puts, very low volume. Super low volume. I want to say this again. We are not, I mean, this is traditional with this time of year being the summer holidays. However, it is still low. And low volume means mostly, I think there's a lot of retail traders around in these markets, and possibly the bigger fish aren't around at this point. Clean energy was the best market of the day. Then we had energy itself being the market that was buying up. And as we scroll through, the defensives were very weak. Utilities actually suffering a very poor session, though being bought off the lows. So it keeps holding its demand, similar to staples and utilities, but no really great pickup in those just yet. We move over to the 5-day average. You can see they've switched a little bit. We have communications, consumer discretionary, and technology up the top, but it's been a pretty lackluster 5 days if you've been a bull in markets. Not very good overall, and you can see gold suffering the most out of all of these. Let's move over now to the charts. We'll start off here with that kind of our barometer of weakness or strength coming out of the big tech. There is no swing trade short still on big tech. It is not leading this sell-off so far. You can see here Magma, which is basically Microsoft, Apple, Google, Meta, Amazon. It is just not selling off. Now, we know we're far away from mean reversion, which is the 20 weekly moving average, but no weakness yet, just kind of floating around the highs. We'll continue to pay attention to it. The volatility of the volatility dropped substantially in the last 24 hours. And that's something that we will be paying attention to. The VIX is, of course, incredibly low as well. So there's almost full complacency here. Very little volatility, very little volume. I guess that makes sense. The skew continues down. Again, that's a good sign for the bears. We went to historically large high points here, back above 150. We've crushed that at this point. And since that crushing, we've seen a minor sell-off of the S&P and, of course, the NASDAQ. Put-call ratio continues to be in benefit of the calls, which means that we should probably think contrarian against that. Too many calls in the system. Great for single stocks, okay for sector rotation. Not really great if you're trying to bull the index too much. So just be careful here. We saw the reading on the 6th of June. We've obviously seen subsequent readings. We're getting the sentiment surveys. All of this type of stuff has happened before. and it tends to lead on to weakness over the market over a multi-month period. Now, we haven't seen too much weakness yet, but we need to be paying attention to it. In terms of central bank liquidity, well, they just keep stuffing it up. Yes, they injected a bunch of money again over the last 24 hours secretly in the back end. Bit of a problem. Of course, we're still very huge discrepancy between them. And everybody is, I'm watching message boards at the moment, getting people sending me messages. Most people now believe the market can never sell off again. Yeah, that's certainly a bit dangerous thought process. I'm not saying it's going to the end of the world, but mean reversion would be nice to have, even if that meant effectively the market just kind of sideways for a while as the 20 moving average catches up. We go into accumulation and then break out again. I suspect, though, that August, back into the July, August, September might be a little bit weak, though, off ERP concerns. Let's move over to copper. Copper's been dropping, found the 61.8 fib, bounced a little bit. Copper still weak. If it's going to find buyers, it must do so, in my belief, within this next little block period. This is where the buyers should recommence if we do have a strong economy. And of course, copper shows us often demand destruction. So in this case, yeah, it's weakened off, but it's found kind of a level where it could find buyers. Let's have a look at junk bonds. Junk bonds were up quite large over the last 24 hours, 0.58%. That's with the market. Again, if the market is really going to sell off, you want junk bonds to come down with the market, or you want junk bonds to drop generally with the market going up. We're not seeing that at this stage. Let's move over to the US dollar. Now, this one was absolutely nailed by the community, so congratulations to you guys. Huge rally off that exact level we were talking about. Very happy with currency the last 24 hours. Euro, US dollar, all US dollar pairs, beautiful stuff. And of course, here with the DXY, a great level. And that's led into gold shorts continuing on. We're just hitting that 1903 level for gold. So interesting to see how this plays out. I have a suspicion gold might even fall off more and then move all the way back down into the mid 1800s. We do not have a turn here. We are looking for a turn. I know a lot of people want to buy gold, but just remember, gold is technically the oldest currency in the world, or one of them anyway. I'm sure there was rocks before then or whatever people were trading. But gold is an old currency. We do need to think of it like a currency, not just a store of value. And at this point, with interest rates going up, it just becomes less desired. I mean, I'd rather have money in term deposits and things like that, earning some sweet 5% plus than necessarily having gold right now. See if that makes any sense to you guys. I think it does to some of the bigger investors. Now let's move over to US oil. We have a drop here and we've got the bottom range and the top range. You can see we're trapped within those two ranges or zones, and you'll notice that we're basically just keep buying off 67. I'm not interested in oil at the moment. I think it's trapped within this area. I do suspect that demand destructions here and oil will go lower, but I'm waiting for that sign. Remember, we dropped shorting oil around the back of May into the start of June, and it's the same thing with metals, but we're still on the watch. We're looking out. We're looking for those types of things. Natural gas continues to kind of form base. I'd say that's in a Wyckoff accumulation base, and it might sit here for a while longer, maybe one more sell-off, but overall looks pretty good for a base bottom. Let's move over to Tesla. So did it hit potential sell-off zones? Well, it certainly did change trend. First time in, I think it was like 60% or something move. So it's changed trend. Somewhere in this area here, I do suspect that Tesla will have problems from the bull side. Very hard to, of course, short a stock that is very, very bullish. It's easier to always go the bull end than the short end. Short, 60% of the time markets are up. So therefore, if you do try to be bearish, it is more tough. And it's not really necessarily advised for everybody out there. But we're in that zone where you expect weakness to come back in. We got a small rejection by the end of the day on Tesla. So definitely a concern level here up until somewhere around 265. The next $10 on Tesla, the bears could be floating around this zone. Semiconductors, no turn of events just yet. We did end up rallying off dropping initially. We're looking for a 143 to show us that proper swing is in for all of the tech stocks. We've got that marked out and set alerts. Nothing really new here for semiconductors at this point. They still remain in a bullish trend. Let's move over to Staples. Staples rallied. You can see here 1, 2, 3 rallies off this point. Interesting. Is that a build of an accumulation level from the big players? Well, I soon think we'll find out. These usually are the periods of time that tend to do better for staples and utilities. We'll find out whether they do over the next couple of months. As we mentioned, Snow had a pretty good setup, I think, on it recently. Came down over that earnings, bounced straight back up, creating kind of like an SOS here on the daily and weekly. It looks like a pretty good accumulation to me. It's gone past its IPO stage, which if you've been watching the channel for a long time, you know I hate IPOs unless you get them early, and then you usually rally that first move, sell the hell out of it, come back in 2 years' time and have a look at where the market's at. Well, guess what? We're past that period now. So this looks like a pretty good base. What do you think in the comments down below, though? This is definitely one of interest. Another one that's got base on it, which is come back to IPO price, is Zoom. Now, this has had a little bit of strange options activity on it recently. Maybe we'll see it continue to climb that wall of worry for that stock. Let's move over to the DAX. What have we got going on in the DAX? Well, we have a high, a low, a high, and no lower low. So we don't know what's going on in the DAX. It's still bullish. It still finds buyers here. I'm not prepared to say too much about that, but do make sure you update your charts. Of course, anything, you make sure the feeds for especially currency.com, if you were using that as a CFD, make sure you update it. That was a mistake I made on that particular chart, but nothing going on in the DAX anyway. XJO, for the Australian viewers out there, we saw the trend line breach below. We came down into this low point. Now, if you load an Oz 200 futures code, you'll notice it came off that demand here. It's having a problem time at this point, which makes some sense. We've taken a new higher high. If you're an XJO seller, it's pretty simple. We just need to go below 71.66, and I think we'd put pressure on the downward side, at least into the 7100s again. I'm still looking for 69.50 on this market. We'll find out whether we can do it. Let's jump over to the American market. So, did anything break out properly? Well, we saw the Russell 2000 come back and test into this supply. That's actually a good sign. We've got a TD9 read on that as well on these timeframes, showing us that we might be in a bit of exhaustion. But we do now have a clear point of where the bears are going to most likely get control of this market and push new lower lows. So for the Russell 2000, that's going to be this point here. So you're talking about realistically around 1837. This being the high, we need the market to actually come down. I'm not necessarily saying this is like a 50-50, maybe even 40% win rate kind of sell here, because yes, you're in supply, but you've got to have your stop loss above here, and it could easily go back to the next level. Now, if it comes back to below this point, that's when you see that confirmation that we should be moving to a new low. So interesting point here for the Russell, straight up into that beautiful breaker structure zone. I like that quite a lot, and I like the level. Let's move over to the Qs. So the Qs, of course, have dropped, made new lows, rallied up, no problems there. Let's move over to the actual NASDAQ itself to see how it played out. So here's the first supply we mentioned. And what we were looking for is we were looking for the market to come back, take a high, then instantly sell off. It kind of happened. It came into our supply above, cool. It did sell off, very cool, but it didn't make a new low. Problem. At this stage, it isn't bearish on this time frame. 15 minutes, 1 hour, 2 hours. We need to see this thing take a new low. So somewhere like on 14,858, that will probably bring the bears back into this chart. You can see here on the daily that we managed to swipe these highs. So great level for the bears. This is exactly the type of pullback you get after you usually find a low. So yeah, it's a very key level. Interesting 24 hours. Bears really need to regain control here of the markets pretty much now. SPX is similar. We saw a sell into the close a little bit here. So we'll just quickly go down and have a look at that on the 15-minute chart. You can see a little bit of selling. You can kind of see like the way it rotated. We had a sell-off. We had a gap. We filled the gap. We made a new high. Nice. Very cool. Took out people's stop losses. Very good. And then now we look for a turn on the markets towards the short side. For the now, though, there's no activation there at this point, but hopefully there will be over the next 24 hours. Here's the futures. Look at that. Same thing. You can see that supply we were talking about, the high steel, no new low. Weird. But look at that. 1, 2, 3. So we know that that is now the important zone. For buyers, what are you looking for? If you see boom like this and it comes out strong, you're going to slaughter everybody, and it's going to go at least 4,400 at that point. Maybe even new highs, 45 plus. I think it's a very pivotal point here in the markets and some interesting times ahead. Let's move over to the crypto side. It continues to struggle with this 30,500 zone. I've talked about how if this breaks out and goes high, I kind of could see this thing going 40K. We haven't seen that yet. It's just floating around doing nothing. Is this distribution? Is it accumulation? The answer is question mark. We don't know yet. We're looking for the signs and we don't have enough information, unfortunately. If we're looking forward, we still have Jerome Powell coming to annoy us, 2:30 a.m. here. And then we have the USD final GDP and unemployment claims. And then we scroll through and we're moving through to core PCE price index, often a number that the Fed does look at. And that's at 8:30 a.m. Friday, June 30th. Remember, next week is technically non-farm payrolls week. So if we click down here and we scroll through, you will see a whole bunch of stuff. ISM manufacturing PMI, that will be interesting to see what happens with the Australian central bank. Will they raise rates again? I doubt it, but if they did, then that would really point towards, yes, the Fed's going to probably do 50 basis points. Then we keep scrolling through FOMC meeting minutes. That'll be interesting to have a look over. JOLTS, PMI, all of that good stuff. And then we have the non-farm employment change. If we are going to go towards some type of recession, we need to see that number actually getting worse. And then that usually means we're about 6 months away on average. Thanks so much for watching. If you enjoyed today's video, make sure to subscribe, enter the giveaway links in the description down below and the pinned message actually. And thank you so much for watching as per usual and supporting the channel. Appreciate each and every one of you. Bye for now.